Welcome to another GRU interview designed to inspire and educate by sharing short profiles of Canadian real estate investors. My name is Ryan Kirk with GRU, Gemaki Real Estate Wealth, where we help busy people grow their wealth and freedom through investment real estate. In this episode, our guest is Ryan Carr, a full-time real estate investor from the Durham region east of Toronto. He's been investing in real estate for over 8 years, and in that time, he's done over 50 deals, including flips, new construction, multifamily, land development, and more. He's also an author and has a new book coming out this spring, which he discusses in the interview. Here's Ryan.
All right, so Ryan, thank you so much for taking the time to join us on this GRU interview. So why don't you just introduce yourself and tell us how you got started in real estate?
Yeah, man. Thanks for having me on. This is great. I got started in real estate in 2012. My wife and I had bought our very first property. We were like 23, 24 at the time, something like that. And it was a bank sale, fixer-upper. My realtor was like, I don't think you guys should buy this. But we were really looking for a project, and we loved the land. It was on a couple acres of land. And so we bought it, and that was our first kick at the can at quote unquote real estate, not even from the investment side, just from the personal perspective, because we needed somewhere to live.
Right.
After that, we bought our first rental property about 6 months later. And then after that, I'd lost my job. So my wife was like, well, you did pretty well at the first couple properties. Why don't you continue on and grow the business that way? And that's what we did.
Wow. So, I mean, originally you were looking for a fixer-upper, you were moving into it. But what led you to buy that investment property, that first property that was specifically for growing wealth? Why real estate?
Yeah, I don't come from a real estate background. So for me, our first property was just like I said, just because we needed somewhere to live. But the second property was actually my real estate agent. She called me up and she's like, hey, I know you guys are like into this fixer-upper thing. Maybe you see it on TV or you're just interested. I've got a bit of a fixer-upper bungalow with a non-legal basement apartment in it. And she goes, would you ever consider buying a rental property? And I was like, oh my God, we're like 23, 24, whatever, just about to get married. We don't have a ton of money, but
Yeah.
Tell me a bit more about it and we'll see. And that's basically how it all started. I went down, I was like, yeah, I think we can make this work. And that's where it grew.
Wow, that's amazing. And now, what is it, 7, 8 years later, what is your main investment strategy or specialty?
Yeah, so now I'm heavily focused in finding opportunity, however that opportunity comes. So what I've noticed over the last 50 some odd properties that we've purchased or controlled is that I'm good at finding opportunity, whether it's a flip or whether it's new construction or severing land or apartment buildings. I'm good at finding that, right? I'm very good at pulling out, what's the construction going to be and what is the end use going to be and finding that opportunity. So for me, we focus on a couple areas, flips, new construction, multifamily, and the odd bungalow duplex conversion here and there. I've done a bunch of those in the past. And whenever they come down the pipe, we take them on as well.
Okay, so you're a jack of all trades. I mean, you can do all kinds of stuff and you're not afraid to try something new, learn new skills.
Yeah, I'm not. What I really noticed is that for the most part, all of the real estate transactions that we're doing require the same thing, right? So that's construction in some capacity, that's purchasing, financing, closing in some capacity. If you're going to turn it back over as a flip to the market, maybe you don't have to do the property management type of job, so you're not placing tenants. But for the rest of it, I mean, it's kind of all the same. So whether you flip it and rent it or whatever, it's we just keep it fresh and it's fun that way.
So of the 50 deals, I mean, how many of those have you hung on to and how many have you sold back out?
My portfolio right now is about 35 units of rental. We typically have between 8, 10, 12 active properties on the go, under construction, in development, so on and so forth. But right now, we have tenanted units, 35 units. Next year, it will be significantly more. But for right now, 35 units. And like I say, 8, 10, 12 properties that are under construction in some way, shape, or form.
Okay, yeah, that's a big machine.
Yeah.
Do you remember, like, of the 50, has there been one that you would say is your best ever deal?
Oh, man. I don't know if anybody's ever asked me that. Best ever deal. In terms of most profitable, yeah, I could probably pick one. I mean, I did a six-figure wholesale that took me like 10 minutes to put together. We did really, really well on that. I've built some really neat
Great hourly
properties.
rate.
Yeah, fantastic. Like, how do you beat that, right? New construction, where the tenants are very happy with the layout that we've chosen. I call it the vertical split. And we're doing our duplex conversions a bit different than everybody else. So that's a lot of fun. And then I just did a multifamily apartment building that we got an amazing refinance on, pulled out all of our equity and then some. So yeah, there's been some home runs in there for sure.
That's amazing. That's great. Now, what about the other side? What about your worst real estate mistakes, and how did you recover from it?
One of them, actually, very few people ask me that either. I love your questions. These are good. One of them that comes to mind whenever somebody asks about some failures is a property that I had bought looking to flip. And I thought I paid a little bit too much on the way in, but I got talked into it and they said, oh, it's a great opportunity. It wasn't as good as everybody was claiming. And I knew I had made the wrong decision, but I made the wrong decision. And when I did that, I said, okay, we're going to go in, we're going to fix it up, we're going to flip this thing over. And we made it into a beautiful home, which was great. But about a week before we went to list the property, the adjoining parcel of land, which was a couple acres, started digging up for an apartment building. And our backyard backed right onto this. And there was like rebar and dust and dump trucks and construction like crazy. And it just completely clobbered the saleability of the house that we had up for sale. So, I mean, that was not great.
Yeah.
You got to quickly pivot and say, okay, what's my financing like? Will this thing actually carry when we rent it? What do we do? So I ended up hanging on to it for a year. I put a second suite out the back of the house in the form of almost like a coach house.
Okay.
Right. And that had been something that nobody had done in the area in the same manner that I had done.
Yeah.
And what was supposed to be a complete lemon actually turned out to be a fantastic deal because I had a beautifully renovated home. I had, after a year, I had a really nice second suite. And then we were getting the best rents of anybody that I had heard of in town at that time. So that was a lesson learned for sure. I still hold that property today. Performs well.
Okay. So yeah, maybe just the fact that you had multiple exit strategies, like you wanted to sell it, but then when things changed, you pivoted, you adjusted your plans and still came out all right.
Yeah.
That's really good. So in these years that you've been investing, what have been some of the main sources of education for you? Where do you go to learn? Obviously, you've gained a lot through experience. You tackle new things, but have there been any outside sources that have helped you along the way?
For the first, I would say 3/4 of my portfolio, I mean, I just did it all myself. I don't know. I'm a big believer in books. I think it's great. But when I got going in real estate, I didn't know what Rich Dad Poor Dad was. I didn't know what highest and best use is. I didn't know what Think and Grow. I think I got a book here on my desk. Here, Think and Grow Rich. It's been sitting on my desk for 3 years. Never read it. Right?
Yeah.
I'm sure it's great. Right? I should probably do that. I just found it today. But like, I've never read any of this stuff, and I don't know, for whatever reason, I've just been able to figure things out, and it's gone really well.
Yeah.
Right? And that's not to say it can't change tomorrow, but for the first part of my career, I just spent a lot of time asking questions and asking people in the industry, like, what would you do? Right? And then I would quantify that in my mind. I'm like, that makes sense. I'll go try it. I took on a coach a couple of years ago. He was out of Winnipeg, and he was very expensive, but very good for me. He recently passed away. His name was Stefan Arnio.
Right.
So I coached with him for a while, and he helped change some of the mindset around the way that I was doing what I was doing and the mechanics of what I was doing. So that's been, very beneficial as well. They still operate a school out there in Winnipeg today.
Wow.
And then, and then from there, I'm just like I'm an Audible, YouTube, read a book every now and again kind of guy.
Okay. So the guys that you would ask, like the professionals or the people that you knew in the industry, how did you meet them? Was there a network that you were part of or some club or anything like that?
Yeah. So I had actually called a We Buy Houses Fast for Cash sign in my local area because I don't know, I'd done like 2 properties, and I was looking for deals, and it says We Buy Houses for Cash. So I figured, well, I'll call this guy. And so I get him on the phone, and we got chatting back and forth, and he said, well, why don't you come out to my meetup group and you can learn a little bit about what we're doing, and we've got a bunch of members and you can meet them as well. And that's how I kind of got started in the first portion of it. And then from there, you meet others. And then when those other people that you meet see that you're actually doing deals and you're being successful with those deals, people start asking you questions. So then the roles start to reverse, right? And, being young, I was 20, maybe 25, 26 when I really started going full-time hard into the real estate thing. And when you're young and at that age, I'm 33 now, people take interest in what you're doing because it's rare.
Right.
It's, and even looking back, not that I'm old and wise, but like even looking back at 24, if I saw a 24-year-old now, I'd be like, damn, that kid's going places.
Right.
Right.
Yeah.
Or if I saw an 18-year-old buying his first property, I'd be like, oh, I just want to help this guy or girl.
Yeah.
It's motivating to see that. So I think there was some camaraderie there being a young
That's
person.
cool. Yeah. So do you have any advice for those people? Maybe they're not 18, maybe they're not 24, but any kind of aspiring real estate investor that's looking to do a deal or looking to start growing their wealth through properties, what would you say to them?
You've got to take some genuine interest in what you're doing. So for those people looking to win, I mean, a winner is going to win whether you're there to help them or not. And people always ask me, like, why do you show other people what to do, or why do you offer advice? You're giving away all your secrets. And I tell them just that, like, a winner is going to win whether you help them or not. And you might as well be on the giving end of that stick, because at some point maybe you'll need them for something, or
Right.
maybe that relationship forms into something bigger than what you both initially anticipated. So you got to really want it on the way in, and if you really want it, people will appreciate that and they will help you.
Yeah. Yeah, that's good. And anything you'd say differently to somebody who maybe has plateaued? They've got a few properties. They started out thinking they're going to really go for it in real estate, but they've kind of lost a bit of interest or passion, or maybe they've had some bad deals and they're discouraged. Any advice you'd offer in that?
Yeah, I mean, some questioning, poking and prodding as to what the problem is huge. Like, so many people, and I say this a lot, so many people see the YouTube ads and the Facebook promos and all the stuff where you can, like, leave your job and make $10,000 a month or whatever, right? It's true, you can, but I mean, for a lot of people thinking that that is reality or the norm, that's a problem. And I fell into that too. I was like, why am I not as successful as YouTube and stuff like this? And then I realized, like, what am I doing? You gotta do what's right for you. So some poking and prodding for those people. You got to find out where the blockage is. Is it family? Is it business? Is it mindset? Is it education? Like, what is the problem?
Right.
I go from there.
Yeah. Yeah, that's good. So what's coming up next for you? Where's your business headed?
Yeah. So for the next couple of years, we had a really good team meeting actually this week with my staff. I got full-time staff here in the Durham region. And with that comes the responsibility of being a leader. And we had this great meeting yesterday, and they said, what do we have coming down the pipe? Because everybody likes to know, right? What's the next step? Where's the edge in the market? What are we doing? And we had this great meeting, and I just laid it out for them. I said, boom, 2020, we've got 2 months left now. These are the following renovations. For 2021, we've got a bunch of new construction coming up, a couple other renovations as well for other rental properties. And I think 2021, 2022 for us is going to be a lot of low-rise apartment building construction. So that's really what's coming down the pipe.
Okay, so that's what you're focused on. That's what you're shifting towards. And tell us about the book you've got coming out in the spring.
Yeah, so that there is called The Highest and Best Use. The highest and best use for me was a way that I could really look at all of the deals that I was doing, right, and crunch them down into like one criteria box. And I define highest and best use is the most profitable or efficient way to do something somehow. So, for example, if you're a farmer and you have to plant a crop, you might ask yourself, okay, as the farmer, should I plant corn, or should I plant soybean, or should I put cattle on that land? What is the best use for that dirt in order to yield me either the least amount of effort or the most amount of money or something, right? So when I'm looking at real estate in the book, I talk about 3 ways to do that. And one is the highest and best use of the land. The other is the highest and best use of the structure. And the last is highest and best use of your own skill sets and time. Right? And when you break those 3 things down, you'll find out quite quickly, hey, this is the way that we have to go with this particular property. Maybe I'm a developer, maybe I'm a basement apartment guy, and from there it'll all shake out.
That's perfect. I love that. Looking forward to reading it. So when does it come out? How can I get a copy?
Yeah, that one's coming out Spring Market 2021, and people can sign up at thehighestandbestuse.com.
Okay, perfect. We'll put a link to that in the video description.
Thanks.
Ryan, thanks so much for your time. It's been great, and best of luck to you.
Thanks, buddy. Thanks for having me on. I really appreciate it.
My pleasure.
Okay, the main takeaways from this GRU interview with Ryan are: number one, know your strengths. For most people, it's recommended that you find a niche and become an expert in one type of real estate investing. Ryan's very different than this. He knows that he's good at finding opportunity. So he's open to all types of property because he's developed the ability to recognize a good deal. Whether it's a flip or new construction or severing land, he's developed a knack for sniffing out opportunity, and he's structured his business around this strength. Number two is figure it out. Ryan is not a guy who struggles with analysis paralysis. He's an action taker, and that inevitably leads to obstacles and challenges, but he's not afraid to face problems head on and figure it out. I've met a lot of successful people like this. They're willing to jump into something before they have all the answers, and they learn as they go. Did you notice the guitar that was sitting next to Ryan in his office? He built it himself. He's a mechanic, not a carpenter. He doesn't even play guitar, but he thought it would be a cool project to try out. And so he went ahead and figured out how to make a beautiful instrument. All right, thanks so much to Ryan for joining us in this episode. I'm really looking forward to reading his book, which is coming out this spring. Okay, Canada, thanks for watching, and happy investing.